At the end of the day, it comes down to smart capital allocation, not just dollars, but also time. Time is our most valuable asset, and identifying those opportunities that provide for the best return on investment. As we look at the entire portfolio that we control, we control, 6-7 million square feet of space throughout the Mid-Atlantic and Southeast. And there are real pockets of opportunity within that portfolio to create value.
Hello and welcome to the REIT Report. I'm your host, Sarah Borkson-Keto. In this week's episode, I'm speaking with Craig Ramiro, Executive Vice President of Asset Management at Armada Hoffler. Craig, welcome to the podcast.
Good to be with you, Sarah. Thank you for having me.
So, Craig, Armada Hoffler's vertically integrated REIT model spans several asset classes. Can you talk a little bit about what that allows you to do?
Absolutely. Happy to. And in a short sentence, really our vertically integrated model allows us to create value. In our 46-year history, creating value means integrating and combining development expertise, construction expertise, and long-term ownership into one effective team to drive value creation. Over the years, that may take the form of development through ground-up development, whether it be a high-rise office building, suburban shopping center, or a multifamily community. Currently, we're taking those capabilities and redirecting them to repositioning or redevelopment opportunities. I'm looking outside my window now, and I can see a 30-year-old shopping center that we acquired a few years ago and are in the process of repositioning that from a single-tenant anchored shopping center that was originally leased to Bed Bath & Beyond, which recently went bankrupt, and are now transforming that into a multi-tenant center anchored by Trader Joe's, Golf Galaxy, driving traffic, creating value through NOI growth. I think we're pushing close to 60% rent growth compared to what Bed Bath & Beyond was paying, and creating value add type returns with a core risk profile type of asset. Further driving value on the potential spread over exits. So we believe that we have a unique capability in that regard and are looking for additional ways to deploy that for future opportunities.
We'll come back to that topic a little bit later in the interview, but let's talk a little bit now about your current approach to office leasing. How is that being impacted by broader factors such as return to work mandates and the supply-demand dynamics that you're seeing?
Yeah, no, that's a great question. We're seeing benefits, and we're benefiting from both factors, especially the supply-demand imbalance for the best office space in the best locations. And that's always been our strategy with respect to office, is identifying and finding and investing in the best product offerings in the best locations in our target markets. We own roughly 3 million square feet of office space, and we're seeing great demand from folks looking for the best-in-class experience for their employees. I'll highlight 2 examples. In Baltimore, where we own roughly 1.6 million square feet of Class A office space, we have the newest, nicest, state-of-the-art type offerings for corporate employers in the market. And so we're able to drive and offer the best experiences for employees and drive rents and create real demand. So the amount of corporate relocations that we've seen is pretty astounding. When you look at our tenant roster from Constellation Energy, with T. Rowe Price's new global headquarters that just opened in the last few months, Franklin Templeton, Transamerica, EY, all of the who's who of finance and corporate America located in Baltimore have migrated towards our location. So we've seen real benefits there. In Virginia Beach, in Town Center, we own and operate roughly 800,000 square feet of Class A space, and we're seeing more demand than we have space for. Companies that are looking to attract the best talent in this market and are looking for ways to compete with the competition. And so what we have to offer here is a best-in-class type experience within an amenity-rich type environment for employees to enjoy, whether it's lunch offerings during the day, evening entertainment options at night. We are best positioned to capture that demand. So much so that here, in our corporate headquarters here in Virginia Beach, we were occupying roughly 50,000 square feet of space within our organization. And we've seen so much incoming demand that we intentionally and thoughtfully have decided to cut our own footprint in half to allow and make room for other tenants to come into the center and complex and really drive rents that way. We're seeing tremendous demand, and it's manifesting itself really in our occupancy rates. I think the last several quarters we've reported office occupancy in the 96, 97% range and have consistently held that. And so office has been a real outperformer in our portfolio, even outperforming our multifamily and retail assets. And there's no sign of that really slowing down at this point.
That's interesting. That's going against the grain of what we hear in other quarters about office.
It's really a story of the haves and have-nots. I think this concept, this notion of flight to quality is real. We are fortunate in that we do have best-in-class offerings to capture that demand. On the other end of the spectrum, there are certain aging suburban, maybe older type product that is certainly struggling, and we recognize that. But for the office assets that we develop, that we own, that we invest in, we're really seeing the benefit.
So with all that demand, is it even necessary for you to change your leasing techniques? Has that been something that you've had to do at all?
Change, not necessarily, but what I'll say is emphasizing the basics. Meaning, when I joined the asset management team here, one of the first things that I did for the team was to really emphasize empowerment and autonomy. We have a very talented group of individuals in our asset management team, particularly on our office and mixed use team. And I've recognized that, and I've said, look, we're going to empower those folks to be aggressive and to capitalize on this demand so that we can quickly adapt and capture it. So changing our approach, I wouldn't necessarily say that, maybe refining it and maybe staying focused and really empowering our team to capture that. That's really been my focus and initiative. And it's benefited well for us.
And you touched on this earlier, but can you talk about the potential that you see in terms of redeveloping assets within the portfolio? What does that involve, and what opportunities are out there today, and how do you make those decisions?
Yeah, that's a great question. At the end of the day, it comes down to smart capital allocation, not just dollars, but also time. Time is our most valuable asset. And identifying those opportunities that provide for the best return on investment. As we look at the entire portfolio that we control 6-7 million square feet of space throughout the Mid-Atlantic and Southeast. And there are real pockets of opportunity within that portfolio to create value. I mentioned the Bed Bath & Beyond to Trader Joe's example. That's a great one. There are some older retail assets within the portfolio that are ripe for repositioning and for unlocking a higher and better use. And given our history in development, in construction, we're able to bring that experience to the table and bring that expertise and that lens to every asset to really to see through the current condition and imagine what could be the best use. And so it could be as small as identifying some excess land in a shopping center for an out parcel use or for maybe an alternate use, or completely reimagining an older aging retail asset into something newer and better. I'm excited about just the existing opportunities for properties that we already control, let alone existing assets that we may try to acquire.
And Craig, can you describe a little bit more about what goes into placemaking, the different components that go into the mix, how you get that right, and some good examples of what you've done so far?
That's a terrific question. And I'll say we're always trying to get that right and to fine tune that. To me, placemaking is all about customer service and identifying your target audience. In our mixed use developments, I think of our customers, I think about our office workers that are here during the day. I think about the residents that live here as well. I think about the visitors that come to experience the property. Yes. Are we providing the right mix of amenities and experiences to serve each of those customer bases? If we get that right, we'll see consistent activity at the development, regardless of the day of the week or regardless of the time of the day or regardless of the season. It's something that we're continually tinker with, right, in our experimenting with. But it really comes down to really recognizing and understanding who your customer is and what their needs are, and are we providing the right offerings to meet those needs. I'll say here in the town center of Virginia Beach, I think we've got a pretty good formula working in terms of placemaking and diversified service offerings, where we have lunchtime options for our office workers. We have evening entertainment type offerings as well. restaurants, theaters, there's hotels, we have high-rise apartments as well. Whoever that customer may be, there is something for them throughout the day or throughout the day of the week.
So is it typical that tenants or potential tenants would come to you with particular needs, or do you feel that you're really one step ahead of them in providing those amenities?
We always try to stay one step ahead, but I think broadly speaking, tenants, particularly office tenants, will come to us, and in a nutshell, they're looking for reasons that they can give their employees to come to the office. Going back to the kind of return to office mandates that we're seeing across the country, employers want to be able to say to their employees, this is why we want you to come here. And so in that lens, I think about ways that we can lower or even eliminate hurdles for employees to come to the office. One example, so here in the Virginia Beach Town Center, we offer free parking for all visitors, guests, office workers. If parking is a concern or commute is a concern, we're well located. We have easy access in and out. There's gateless entry to the garage. So that hurdle is completely taken off the table. We just opened up a new 6,000 square foot fitness center in the complex, completely free to all office tenants. So if you choose to office here, your employees will have free access to a fitness center that has state-of-the-art equipment, newly refurbished, all completely free of charge. And in addition, you're located in an amenity-rich environment with dining and entertainment and restaurant and happy hour type options for your employees. So it's really creating that environment that people actually want to come to and want to spend time in.
Great. And are there any other initiatives or strategies underway at Armada Hoffler that you'd like to highlight that you think listeners would describe better what you're doing today?
We've just onboarded a new CEO in January. And what I can tell you is the focus is on driving efficiencies, driving value, and being laser focused on operations. So I think we've been incredibly successful over the years creating value through our vertically integrated model, development, construction, and investment. And now as we transition, like I said, we're 46 years in to the business. We are now pivoting towards a laser focus on operations. How can we drive efficiencies, real long-term value creation? We've been fortunate to establish a competitive advantage in Baltimore and Virginia Beach with respect to our office assets. How do we sustain it? How do we, like you said, stay one step ahead of that tenant demand? And so we're always looking for ways to try to sustain that advantage and not lose it. And that might mean fine-tuning our retail mix for folks and adapting to changing needs and demands of our office tenants and their employees, and finding new ways for employees or new reasons for employees to come to the office.
Finally, Greg, any other broader themes or trends in office leasing that you think you'll be paying particular attention to going forward?
Going forward, with respect to office leasing, it seems like particularly in office, there's this evolution towards viewing real estate not just as a physical asset, but more as a service. And that's something that will continually influence our thinking and our approach, almost bringing a hospitality type focus to office ownership and office management. And so that's something that we're focused on. Like I said, it's something that we'll continue to look to sustain and hold on to our competitive advantage in the market. And it's something that I'm excited about. We've enjoyed tremendous success, particularly in the office space, and look forward to continuing to drive value.
Craig, it's been a pleasure speaking with you today. Thanks so much.
Thank you, Sarah. Thank you very much for your time.
And to our listeners, if you enjoyed this episode, please subscribe or leave a review on your favorite podcast platform.